Welcome back to ICT Trading Concept. How are you all? For going further, let me know that voice is clear. I mean, you can hear me perfectly. Important for me as well, because if you can't tell me that you hear me and I'm just talking, you don't hear me, that's not good. So let me know that you can hear me. Not more people, but it's cool. I think most of the people are not interested to talk, I mean, to listen about the gold. I'm coming here to the gold. It's because I don't have the data subscription for Nasdaq. So let's go with the gold. Okay. For before starting, please let me know that you can hear me. And ta-da! Not much here. Dollar index dollar. Can you hear me, brother? Can you please write it down that yeah, I can hear you, or just write it down that no, voice is not good. But I have to know first that you can hear me or not. Uh, 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 uh. I'm doing this third video. Cool. Let's get it. Okay. Levogang. Mukavela. Can't you hear me? I mean, nobody's replying, so I think you are not hearing me. But you should hear me. Can you please write it down that you can hear me or not? Please. It's important. Uh, uh, uh. No reply. No one is willing to write it down that you can hear me or not. To be honest, seriously. Mm. Okay. How do I know? Then should I close it, or I can write it down? Okay, you can hear me. Thank you, Stephen. I mean, there are some other people as well, but nobody replied. Okay, why you guys just replied too late? I mean, I'm just waiting for near about 3-4 minutes and you didn't reply. So thank you for confirming that you are hearing me. Okay, that's cool. Thank you. Okay, your voice is clear now. Okay, thank you. Hey George, how are you, brother? Stephen, I would love to go for the gold today, and I will talk about there. I mean about the price action, but everything is same, right? Maybe it won't be precise, but I think it will be same. This is the dollar index chart, and I would love to mark the hourly fair value gap. This is the last fair value gap from the hourly chart. Price came here to this hourly fair value gap. It went higher to the last fair value gap from the hourly chart. Now it has made relatively equal highs. It came lower. It has a very clean sell side liquidity. When I'll be in 15-minute chart, you will see the sell side liquidity over here. But from the hourly chart, you can see very clean buy side liquidity. I mean, relatively equal highs. That is my buy side liquidity. Price is just below the consequent encroachment of the last fair value gap. Okay, that is the only thing I'm worrying about. If a hourly candle can close above the consequent encroachment, the body close, okay, if it go above, then it come back again below the consequent encroachment. It's not breaking the consequent encroachment. I want to see a body that will close above the consequent encroachment. That will help me to determine that market is actually going higher, and it is going to take that buy side liquidity. Later it will take that or not, that is different matter, but I will start to think, okay, now it's time to go over there. And price came here, came to the water block perfectly. It came to the water block, it started to go higher. Okay, now let me go to the 15-minute chart. So this is the 15-minute chart, and this is your sell side liquidity. If you remember from yesterday live, I marked this portion of the 15-minute fair value gap. The whole fair value gap is from here to here. I marked this portion as my 15-minute fair value gap. It's because in my opinion the upper portion is already balanced, because there are so many buy and sell, buy and sell, buy and sell. So it's balanced, okay? And but this portion of the 15-minute fair value gap, it's It's not, it's not filled yet. So I have just marked this portion. I would love to see if market would love to go lower. It has to take this sell side liquidity. Then I will look at the last fair value gap, the 15-minute fair value gap, if it can hold the price or not. Now, the consequent encroachment of this portion of the fair value gap, it's not important. I don't need the consequent encroachment. All I need is how it reacts from that 15-minute fair value gap. If market would love to go lower, I don't believe market is coming lower. Why? Because tomorrow we have the CPI. I would love to see market will make some kind of liquidity for CPI. So in my opinion, it has made relatively equal highs. Price tried one more time to take that sell side liquidity. It failed. Instead of that, this swing low has made this sell side liquidity more stronger. I believe this will be the target from tomorrow. From the CPI. Today, this buy side liquidity is cool, okay, but it is going to take that liquidity or not. That's a different matter. I don't need that. If I see a body close from the hourly chart above the consequent encroachment, that is kind of sign market is going toward that buy side liquidity. So I will think the dollar market is bullish. I will go every other market. I will go for sell every single other market. I don't need to hold my trade until that buy side liquidity. It's kind of one day, one entry, just one trade entry, and just run away from the chart. It's kind of the same thing, okay? Because tomorrow you have the CPI. You have to expect that market is going to make the liquidity today. You have to expect that. Now, hey Remy, how are you, brother? Now, price is actually respecting the constant encroachment from the hourly chart. I don't count this because I am in 15-minute chart, and this is the fair value gap from hourly chart. So I don't count the consequent encroachment when I am in 15-minute chart. If I mark any type of fair value gap from hourly chart, I would love to go to 5-minute chart, and I would love to see the market from 5-minute chart. If I would love to watch the consequent encroachment, high or low, anything, I would love to see the price action from 5-minute chart, not 1-minute chart, not 15-minute chart. Okay. If I mark the fair value gap from 15-minute chart, then I will count the 1-minute chart price action to watch the price how it reacts to that specific 15-minute fair value gap. I think it's helpful. It will be helpful for you. If I mark a fair value gap from daily chart, then I will go either 1 hour chart or 15-minute chart to observe that fair value gap from daily chart. Okay, most of the time I go for 15-minute chart. Very rarely I go for 1 hour chart. So this is all relative. I mean, if you would love to watch the market like me, you can, or if you think there is other way you can read the price perfect way, just go for that. Okay. So right now my expectation is how price react over there. Till now I'm thinking maybe market is going higher. Why? Because it has taken the sell side liquidity. It has given me market structure shift. There was a fair value gap, also the order block. It went higher. This is the order block level from the 15-minute chart. If you see, this is the order block, okay, bearish order block. Now it failed to hold the price. There is another level from this order block. Let me actually mark it as well. All I want to see, market will break that 50% of that order block. A body will be closed above that level. If I see a body close above that level, I'll be 80%. I'll be confirmed that market is going toward that buy side liquidity. I'm telling you again, it is going to take that buy side liquidity or not. That's a different matter. I don't need to see. Take the buy side liquidity. I just need a run. If I get a run, that's enough for me. Okay. Now I would love to come to gold market. So this is from, okay, let me actually go to hourly chart first. Why I'm in gold? Because I don't have the data plan. Okay, that's why I'm just talking about the gold. But trust me, brother, the price action is almost same. Okay, so you can see over here. Okay, price has taken the buy side liquidity. It went lower. It has given me market structure shift. That's cool. I have two fair value gap. This is the breakaway gap. Now I didn't mark the last fair value gap, but if you just mark the last fair value gap, you will see prices traded the last fair value gap. Okay, I always told you to observe the last fair value gap. As this is the setup from hourly chart, I just need a direction. That's why I just mark this fair value gap. So two fair value gap. First fair value gap should be your breakaway gap. This fair value gap should be your place where you should take your entry. Okay, that's why I have just marked this fair value gap. Let me actually mark the breakaway gap or the last fair value gap as well. So you will be understand why I always talk about the last fair value gap. Okay, price came to the last fair value gap. See, the last fair value gap hold the price. That means market is not willing to take the buy side liquidity. Any kind of buy side liquidity above this fair value gap, it's not willing to take that. Price come to this fair value gap, it went lower. What it has done, it has made relatively equal lows. Where is your relatively equal lows, brother? Always you talk about the relatively equal lows. Where is it? So you can see there is this low and that low. They are relatively equal low. Okay. Now where price came? This is the daily fair value gap. Don't be confused. I mean, uh, this is the daily fair value gap. Okay, but I'm not talking about the daily fair value gap. I would love to see any fair value gap over here because this is the run. Is there any fair value gap? I don't see any fair value gap, so I would love to mark the the order block, the opening of this down close candle. That is the level. So price came to the order block level. It went higher. Okay. So where did it go one more time? To the hourly fair value gap. So price came here to the hourly fair value gap. Now I will go for the what to say, the 15-minute chart. This is from the hourly chart. Let's go for the 15-minute chart. I talk too much, right? I know, I talk too much. So you can see price has taken all of this plain sell side liquidity. Anybody has any confusion about that? I don't have. This low, that low, and this low, all of this low has made this, I mean this relatively equal lows very stronger. Price came below that level, this liquidity level, it went lower. That means it has taken very clean sales and liquidity. Then boom, price went higher. Where did it go? Did it take the buy side liquidity from there or any kind of relatively equal highs? No, it didn't take anything from there. Instead of that, it went higher, failed to take the buy side liquidity. What does it mean? That means I am going to mark the setup from 15-minute chart. I got the market structure sheet over here. This is from 15-minute chart. Okay. Now, when I got the market structure sheet from here, this is the leg. Guys, don't get confused. Okay, this is the leg. This is from 15-minute chart. Where is your first fair value gap? Do you see your first fair value gap? This is your first fair value gap. What is it called? It is called breakaway gap. Now I didn't mark this fair value gap. Why? What is the reason? Can anyone tell me why I didn't mark this? Instead of that, I have marked that fair value gap. Though I didn't mark that one, but I will talk about this. Okay, but why I marked this one? Can any of you, can you tell me why I didn't mark this one beforehand? Okay, in the meantime I will talk about something else and I will wait for your reply. If anyone can tell me, I'll be happy because I'm just spending my time so that you guys can get something from here. But if you don't get it, that is my failure. Okay, now there is another fair value gap over here. That is the last fair value gap from 15-minute chart. Now price didn't came here. Why it didn't came to the last 15-minute fair value gap? What was the reason? The same reason I would love to talk over here. See, from there I have another fair value gap above this fair value gap. Also I have the hourly water block level. So everything, hourly water block level is much more stronger than the 15-minute fair value gap. But later I believe price will come to this fair value gap. I will see when price will come over there. Okay, price came to the upper fair value gap and went higher because it is below liquidity. That's cool. That's cool, George. That is the reason. This is at the level of the liquidity. Okay, if I just expand it little bit more, look where this fair value gap stayed. uh, Euro USD. Why? You are not interested to, I mean interested about the gold, brother? You are interested about Euro USD? Ah, man, I'll go over there. Just give me some more time. So let me mark the exact liquidity level. So it is at the level of the liquidity. What I told you about the liquidity level. When it is at the level of the liquidity or below the liquidity, I don't care about that fair value gap. Okay, that is not my fair value gap. When it is not important, when I'm expecting a setup. So this is my setup from 15-minute chart. Okay, so here this is your fair, I mean breakaway gap. This is your first fair value gap. What should you expect? Price will come to this fair value gap, it will go above and take the buy side liquidity. If it expand lower, the consequent encroachment of the breakaway gap, this is the breakaway gap. So this is the breakaway gap. It can't go below the consequent encroachment. Okay, that is my expectation from 15-minute chart. When price come to this fair value gap, the upper fair value gap, I will go to 1-minute chart and I I will look for a buy setup over there. Okay, if I get a buy setup over there, I will take that. If I don't get, I am not interested to take sell. I'm not interested. Okay, not at all. I'm not interested to take sell. I will wait until it will come to the breakaway gap. If I see it came to this breakaway gap, I will go again to the 1-minute chart and I will look for another buy over there. If I see this gap is also broken, only then this is gonna be my last fair value gap. I will use this fair value gap, that if this fair value gap can hold the price, if it failed to hold the price, then it is going lower, it will take the sell side liquidity and it will come to this 50-minute last fair value gap. So I mean the difference, try to understand the difference. When I'm expecting a setup, I will expect price will come to the first fair value gap, it will expand higher. If it expand lower, the breakaway gap consequent encroachment will be its last run, then it will go above one more time. Now I don't care about this fair value gap when I'm expecting higher run. If I'm expecting, I mean I'm not looking this as a setup from 15-minute chart. On the other hand, I'm just seeing prices falling. Then only then I will care about this fair value gap. This will be my last fair value gap from the 15-minute chart. Now I don't need to think about the liquidity. Is it clear or not? Okay, let me actually know that it is clear or not. This will be the last fair value gap. Yesterday I mean one of you actually told me that last fair value gap is equal breakaway gap. Okay, so not every time, it's kind of breakaway gap, but not every time. Okay, if I'm expecting a setup, the 22 YT model setup from 15-minute chart or 1-minute chart or any time frame, I'm expecting a setup, then I will see the first fair value gap, is it at the level of the liquidity or below the liquidity. Now just think I'm wrong. So price is not going higher, actually it is going lower. I'm wrong about the setup. Then I don't care about the liquidity level fair value gap. This will be the last fair value gap when price is falling, because if the last fair value gap can hold the price, it will go higher again. If it failed to hold the price, it will just go lower and take the sell side liquidity. That is more obvious. I hope you got my point. If you don't get it, just ask me the question. I will try to talk about this one more time. Okay, so it will be important when I won't think market is actually giving me the setup run. First parallel gap, boom. When I will start to think like that way, I'm not interested to any of those parallel gap. I will go for the last parallel gap. So every, I mean every last parallel gap is not the breakaway gap. Okay, and every breakaway gap is not the last parallel gap. This is the difference between the last parallel gap and the breakaway gap. I think you will get my point. Now I'm here from 1-minute chart. So that was the first parallel gap from the 15-minute chart. I don't have premium. Which chart I open for NQ1? Go for US 100. I don't get the precision from there, so I don't interested to take. Okay, take NQ or something like this. Okay, so I would love to go one more time from 15-minute chart. So Where when price started to go lower, where did it go? To the last fair value gap. This is the last fair value gap from 15 minute chart. Where did it go? To the last fair value gap. Is it premium or is it discount? I'm not thinking like that way. I'm just watching the fair value gap. If this fair value gap can hold the price, there is no chance market will go higher. It will go lower. If it failed, I will start to think market will come at least to the consequent encroachment of this week. If the consequent encroachment failed, then it will go and take that buy side liquidity. So I care about the last fair value gap. Here I'm just thinking as about a setup. So I'm interested to see the fair value gap. If it failed and if I get the confirmation from the dollar index, let me actually go over there. If I see dollar is going higher, it is interested to go higher, then only then I will start to think it is not going to hold the price. I will remove this one from my chart. I will bring it over here. And if I see it's broken from 1 minute chart, it's broken. I will wait for the setup over here. This low or this last fair value gap from the 15-minute chart will be my target. I think that's very simple thing. I mean, uh, because I really don't know what to see, what to say, and how to say. You guys don't ask me the question. You guys don't give me the reply. So I have no idea you are getting my point or not. I'm just talking, talking, and talking. Whatever. Let it go. So if you are with me in my Twitter, you can see I showed a setup. I mean, buy setup over here. Okay. So that was a low. Price just go below that low. That is the shallow run. I always talk about the shallow run. When I saw this shallow run, I got confident that market is going to take that sell side liquidity. Sooner or later, it is going to take that liquidity very soon. In the meantime, I have seen prices taken the liquidity. It went higher, give me a market structure shift over there. There was two parallel gap. The same setup I was talking over there. Let me actually mark it because some of you are not with me in my Twitter, so I guess that will be easier for you to understand what I'm talking. Okay, so it has taken the liquidity maybe for a small, very small. Okay, I'm not interested to take sell over here. I told you before, and brother, I'm not interested to take sell until price go through this gap. If it went through this gap, then I will start to think market will start to go lower. Okay, so over here I'm not interested to take sell. That's why I'm not talking about the price. When price will be here, I will talk about the current price. When price will be here, and I believe that market will come here. And if you just go to the starting of my stream, you will see I had only one fair value gap to my chart, and that is this fair value gap. So I got my market structure shift. Then I will talk about my well-known setup. I'll let's talk about this. This is my well-known setup. I believe this setup works most of the time. Now you have to do the backtest it if it works or not. Okay, and you can see price come to the first fair value gap. It went higher. Okay, now this is gold. I was expecting price will come to this fair value gap from 1 minute chart. Okay, I was expecting, so my target was over there, but actually price came over here. Okay, so actually price came over here. Now if you ask me why price come over here, I can show it to you. I mean, I was thinking that that is the perfect place where price could retrace. Why? High, low, higher high. I have a very nice boom here. Okay, I have a breaker over there, but I was expecting it will go at least to that fair value gap. I mean, the breaker high, it will reach over there. That is why I put my target over there. And as this is the first time I did the paper trade or something gold, I had no chance to take the partial. I mean, I took some kind of five contract, something like that. So it was kind of $7, $8 profit. So I didn't even take the partial. Whatever, you all of you know that I always love to take my partial whenever it will go some kind of certain level. I take my partial. Okay, so many love from Nepal. Explore everything old. Okay, thank you, brother. I will take your love from because you're from Nepal. I have so many friends. I have so many friends from Nepal. I love you. You guys. You guys are so good and friendly, man. I have so many friends from Nepal. 0.5% is equal CE. CE is means consequent encroachment. That is the 50% of any kind of fair value gap or 50% of the week. Okay. Uh, the week 50% is also called the consequent encroachment. I don't have premium. Okay, so I think I gave you the answer. You done ICT private mentorship because your knowledge is so nice. I did it in 2019, but if you ask me, I didn't learn anything from there. Okay, I didn't learn anything from there. But whatever I have learned from his free YouTube teaching. Whatever I got, yeah, I got it from his YouTube teaching. I mean, the free mentorship. I got it from there. You done ICT period, okay. After MSS, we will get to fair value gap means where will we will enter breakaway gap or to fair value gap. Okay, Babu. You have to take your entry to the upper fair value gap and you have to cover the stop loss. I mean, you have to cover the consequent encroachment of the breakaway gap. If I see a very small breakaway gap like this, then I will go for just like let me show you. Okay, I will go for this. I will go for this type of entry. This type of entry I will go for. Now here, if it was Nasdaq, I would put my stop loss just over here. As this is gold and there is a spread or something, I put my stop loss over here because I don't know how to work with the spread. It's been a long I didn't trade. So I mean no forex, no gold. No, in gold I traded two times maybe. So far I remember two times I trade in gold and both of them were losing trade. Okay, and it was so long before. That is why I don't trade any other market except the future because in future I get the precision. I can easily put my stop loss over there and I will be confident that market is not going to hit my stop loss. If it would love to go lower, it can go to the consequent encroachment. If it has a run, it will keep some portion of this fair value gap will be open. Nobody will close below the consequent encroachment. That is my belief. So that should be the entry setup, but it is and this is your answer, brother. Babu, you asked. You have to enter to the first fair value gap, and you have to cover the breakaway gap. Okay. Hey Rahul, how are you, brother? Yeah, you can leave a like if you want. Okay. Core content or 22 mentorship. 22 mentorship, brother. Core content. I don't. Core content is kind of general information. Okay, you have to study the core content. I mean, you will get a general idea from the core content like the breaker block, order block, rejection block. You will get a general idea. That is not precise. That is nothing. That is the general idea. Okay, core content is kind of content that will help you to build your own model. Okay, if you would love to build your own model, then you have to study the core content. That is actually the core content. So I don't pay attention to core content too much. I just paid my attention to 22 YT model and the 2023 the last year mentorship or every live ICT did every video he has uploaded. I studied all of them. Okay, so core content I didn't spend my time over there. Now, if you are with me in my Twitter, I have uploaded a video where I have taken my entry over there and I wrote it down that as it is gold, I would love to go for the confirmation. Okay, what do I mean by that? So I take my entry when price come to the order block level. It went over there, it come to the order block level. I was in the market and my target was over here, and as it was paper money, so I wasn't I mean so much serious. But if I was serious, I would take a partial over here as I don't have any buy side liquidity. Don't forget this. Okay, I don't have any buy side liquidity. All I have some kind of fair value gap where price should go. That is why you will see I didn't put my target profit over there. For me, this last fair value gap was more obvious. Okay, that is why I put my target profit over there. But actually price came here to this fair value gap, to that ramp, this fair value gap and the breaker block. So price came to that breaker block, it went lower one more time. Okay, and hit me to my break even. and that's cool. I'm not I mean it's cool because if it was a run from the Nasdaq, everything is same. I mean, whatever I'm talking here, it will work to Euro USD, it will work in Nasdaq, it will work in maybe Bitcoin. I never trade in Bitcoin. I mean the cryptocurrency. It will work every single place. Okay, you have to just follow the rules. The same thing. Why I took that buy entry? Because price came. Where did it came? I mean, over here, where did it came? To the 15-minute travel gap. Why this 15-minute travel gap is important? After taking the sell side liquidity market structure shift, this is the first travel gap. That means when price will come here, it will go higher and it will take the buy side liquidity. That is my expectation from 15-minute chart. So this is the 15-minute travel gap, first travel gap, and this is the breakaway gap. I already talked about this gap. When this will be important, I talked about this. Okay, so when price is in the 15-minute, let me actually mark it. That will be easier for you to understand. So this is the first parabolic from the 15-minute chart. Don't forget. Now I am in the 1-minute chart. When price came to the first parabolic first time, this is the first time when price come, and when it come here, it has taken that low. That's enough for me to mark as a liquidity taken. Okay, when I mark my target profit, I always mark the equal highs or equal lows as my target profit. But if I mark the liquidity taken, single low, single high is enough for taking the liquidity. But if there is, I mean, equal lows, equal highs, that is more perfect. But I go for, I mean, any of them is enough for me for marking as the liquidity taken. When it has taken the liquidity, very energetic run. Where did it go? Above that swing high. Why this swing high is important for me? Because it has traded that specific fair value gap. This fair value gap. Now, this is not perfect swing high for shifting market structure. You should wait for some kind of more perfect price. I mean the swing high that is more perfect. I have already talked about this so many times, so I don't want to confuse you. The same setup from here, from 15-minute chart, from 1-minute chart, same setup, brother. Taking sell side liquidity, market structure shift, first fair value gap, second fair value gap. There is another fair value gap. Look at this fair value gap. I don't care about this fair value gap. When price is over here, I don't care at all about this fair value gap because this is not even a fair value gap. Okay, this is not even a fair value gap. This is just a gap. It doesn't have any fair value. It doesn't have any kind of fair value. Now that is also some confusing thing. But just remember, this fair value gap has no value. You can use the breakaway gap or the last fair value gap and the upper fair value gap. Price came to the upper fair value gap. I am already in the market. As this is gold, so I wait for the confirmed price action. So when price went above the constant, I mean the order block level, I was in the market. When price go, I mean gave me another market structure shift, that was more confirmed that price is coming over here. And I have marked this level. Why this level? Because that is the order block. To that run, this order block is more perfect. I wanted to see price will go through the order block level and the mean threshold level of the order block. I wanted to see, I mean, I told you that when price will be here, I will put my stop loss to the break even. So I put my stop loss over there. I was holding my trade until there, but I got stopped out. Now, what happened then? Price went lower, it went higher one more time, failed to take that buy. Instead of that, it went lower. When it started to go low, what I'm expecting? See this run. Price came here. You will see, it has taken the buy side, I mean sell side liquidity. Maybe kind of buy. I mean market structure shift. This is a fair value gap. It has traded that fair value gap. I'm going for buy. No man, I'm not interested to take buy over here. Why? Because price came to the first fair value gap from the 50-minute chart. Don't forget, brother. This is the 50-minute first fair value gap. This is the 50-minute second fair value gap. When price come to this first fair value gap, this place, it has given me a very nice setup over there, but failed to reach at least to the last fair value gap from 1 minute chart. It failed. Even it failed to take the buy side liquidity. And over there, the most buy side liquidity over there, it failed to take any kind of buy side liquidity. Okay, so it failed to take buy side liquidity. It come back again to same fair value gap from 15-minute chart. Now you are expecting it will work. I don't expect this. Why? Because I'm thinking price has seen this lower fair value gap, the breakaway gap. So I'm thinking price is going over there. Now Am I interested to take sell over here? No, I'm not interested to take sell over here. Why? The reason is nothing is 100% confirmed in this market. In this market, nothing is 100% confirmed. What do I mean by that? That means I know I'm expecting price will go lower, but it can just come more deeper to this first 15-minute fair value gap, then it can expand higher. It can easily do that. That is why I'm not interested to take sell over here. I will take my sell when, only when it will be, I mean, it will give me some kind of precision that market is actually going lower. How do I know that market is going lower? See these candles. If I would say a candle has closed just below this first 15-minute fair value gap, okay, just think this candle closed just below the 15-minute fair value gap, maybe for one tick. Okay, now pips and tick, they are the same thing. I'm used to talk about tick because future market we used to talk about tick. So just you will think like pips. If I would see one pips below this 15-minute fair value gap, price closed over there, that would be my confirmation that market is actually going lower. That would be my confirmation. Then I would see this has taken the buy side liquidity. Now it will go lower. As it closed inside the first 15-minute fair value gap, I'm not sure where price is going right now. It is kind of the indecision moment for me. Why? Because price has taken the sell side liquidity, it went higher, it is going higher maybe, or it is actually taking the buy side liquidity from here, from here, maybe from here, maybe it will take this buy side liquidity, any kind of buy side liquidity. It will take the buy side liquidity, then it will start to go lower. It can do that as well. This is the level. Now you can tell me, brother, see whatever you are talking about, you missed. If you took that entry, you are already, you are profitable. That is gambling. There is no high time frame precision. If price would love to take the buy side liquidity, it would do that from here. As it didn't do it from here, I don't believe market is going to take that buy side liquidity right now. I'm not thinking the market like that way. I'm thinking it is actually taking the buy side liquidity and then it will expand lower. That is my belief. Okay, actually let me take the, okay, over here. It has closed above the constant cost, I mean the mean threshold of the order block. So that is kind of confirmation that market is going higher. Okay, look, if you remember, this is the order block from 15-minute chart. This is the constant encroachment, I mean the mean threshold from 15-minute chart. Price closed above the mean threshold. That is kind of confirmation that market is going higher. Now why market is going lower? Maybe it is coming to this specific volume imbalance, or maybe to this order block level from the lower, I mean lower part. Okay, maybe it will come on of this level, or maybe to this fair value gap. It will come here, then it will expand higher. When price is going lower, you are actually seeing the higher run from the gold. I believe this is kind of the manipulation. Okay, so this is 930. I believe this is the manipulation. If I see, if I would see a body closed below this gap, if you ask me, gun to my head, I'm expecting lower run. I'm not expecting higher run. I'm expecting lower run. Only reason I am not interested to take sell is I didn't see anybody that has closed below this gap. I'm sorry guys, little cough. Okay, so I don't know you guys are getting my point or not. Okay, you don't reply me. Why? Because I'm just talking, that's why you don't reply me. Oh man, seriously, I would love to mark this fair value gap. This was the breakaway gap, and I believe that is actually I don't need all of this level. I would love to say market will go below that fair value gap. This is my, I mean the inversion fair value gap. Now, why it is inversion fair value gap, that is a different matter. And I would love to see market will go below that fair value gap. Then that is a perfect place for me to sell. Okay, but I'm not. I'm telling you, I'm not taking any kind of sell. Why? Only reason I didn't see any body closed below this 15-minute fair value gap. If it would love to go higher, I'll be cool with that. I will wait for another setup, another perfect setup, which will give me the precision. Why I took the entry over here? Because price came to the first fair value gap, gave me a very nice setup. I took my buy, I mean buy over there. Here I didn't get any precision except it has taken the very clean sell side liquidity, this low and that low. They had made the relatively equal lows. The price has taken that low. It went higher one more time to this inversion fair value gap. It went lower. It has taken more sell side liquidity. It went higher. I believe this is the fake move from what to say the from gold. It is the fake move. And at the same time, dollar index gave me the precision over here. What type of precision dollar index gave me? This is from 15-minute chart, dollar index. You see this order block level, it failed to hold the price. Even the mean threshold, I mean the 50% of the order block, price closed above that mean threshold. That is kind of sign market is going higher. Now, it will come here, I don't know. I want to see some kind of higher run. That's enough for me to take a sell over here. Now, if you ask me, I am seeing any kind of higher run is suspicious for me. This is liquidity taken. Okay, it is just taking the liquidity. I'm not telling you that you just go with my expectation. This is my expectation. Price can easily go higher. It can do that. If you ask me, I'm not expecting higher run. I'm expecting lower run. It should take this low, that low, and it should reach over here. Okay, as this is the live market, so I'm not going to push my button. But if it would, I mean the Nasdaq, I have the delayed over there. I would do that, but over here I'm not doing anything. I'm just watching this fair value gap. If this fair value gap is failed to hold the price, that is confirmed that market is going lower. Now this is the time for your question. Okay, if you don't just question me, if you just stay over here and don't let me know anything, if you don't ask me the question, I don't know anything from your, you know, whatever you are thinking. You are getting my point or not? I'm not getting that. So please write down something so that I can know there is some people who are alive. Okay. What is your question? Okay, nice and clear. Okay. Until MSS we didn't get the fair value gap means after MSS we get first fair value gap created means shall we enter? What do you mean by that? See, when I got the market structure shift, I will look at the leg. I will look at the leg. I will go for the first fair value gap. That will be my breakaway gap. If it is just above the liquidity level, then I will mark that as my breakaway gap. The upper fair value gap, that is my entry point. But I will look for those fair value gap only after getting my market structure shift. Okay, so that is the way I enter. Okay, from where I start ICT, I know all basics. Okay, man, this is a question. How can I answer that? I mean, I have no idea, brother, how I can answer your question. I mean, from where you should start ICT. But I think 22 YT model is cool. I mean, 22 YT model mentorship, you can watch that. Okay, I guess it shows some example for I fair value gap entries. I fair value gap entry, but that is you are actually telling me to search something. Okay, but I don't like that one. I mean, I just can show you the live price over here. This is my inversion fair value gap. Look at this fair value gap. This is my inversion fair value gap. If price go through this fair value gap, I'll be confident to take my sell over here. Depending on that fair value gap, I'll be confident. Okay, so if you think this is I mean example, then you can say like that way. But I don't know how to find a setup for the I fair value gap or the inversion fair value gap. Whenever I will see inversion fair value gap, I talk about them. Okay, so it's been long. Just wait with. I mean, stay with me. You will get the point. Is a breaker more important than a fair value gap? Man, fair value gap is everything. If you interested to learn the ICT concept, fair value gap is everything. There is nothing that is important more than fair value gap. If you just would love to, I mean, clear the fair value gap from your context, you will never get anything from here, from ICT. You will never get anything, nothing at all. Okay, so fair value gap is every single thing. See, I took my cell over there, it came here, the school. So I will put my stop loss over there because, and here. I have no idea how to, sorry, the breaker, breaker, fair value gap, that is the most important thing to this concept. That is the important thing, okay? Are you reading price action from NQ, bro? George, the problem is I don't have the data plan. So I'm unable to read the price from NQ, and it's disgusting to see the delayed data. That is why I'm just talking about the gold, okay? Because here I have the what to say, the mm, live data or something, okay? That is why I'm just reading the price from here, and very soon I will get the what to say, the live data. I guess, okay. So when I will get my live data, I will go back to Nasdaq. Thank you, George. Thanks for understanding. So that is the that was the trade, and when price was going higher, I told you that is the fake run. It is just going to take all of this bicep liquidity. Where did it go? It came here. It has made this relatively equal highs. Don't forget about this bicep liquidity. The very clean. This is the very clean bicep liquidity. Okay, so very soon it is going to take that buy side liquidity. I believe it will come to this breakaway gap. I will look for another buy setup. Okay, this is the setup. Usually I don't take. This is the inversion fair value gap setup. I mean, price went through the inversion fair value gap. It come back. It tried to come back over there. I was in the market. That low, that is more obvious. If you would love to hold your trade until the breakaway gap, that is also fine. See, this candle close below this 15-minute fair value gap. If I saw this thing, just this thing here, I would take my buy over there, and I would go for some kind of buy side liquidity, maybe until here or here, not until here, but all of this buy side liquidity I would go for that run. I would take my entry over there to that specific fair value gap. I mean, let me mark it. It has taken all of this buy, sell side liquidity. This is the sell side liquidity taken. That would be my market structure shift. There was the fair value gap, only fair value gap, so I don't have two fair value gaps, so I'm interested to take my entry to this one fair value gap. In that fair value gap, I would take my entry over there, here, put my stop loss over there. Because of the spread, maybe I would put my stop loss over here. I'm just kidding. I really don't know how to put the stop loss, and my target would be here, somewhere here, above those highs. I mean, all of these highs are very clean. I wouldn't hold my trade until this high or that high, but here until there, that would be my trade. If only if I saw this thing over here. As I didn't see, I was thinking all of these are fake move. Now it is trading this fair value gap. I believe it is going lower now here, from here, okay, just from the constant encroachment of the 15-minute fair value gap. It is going to retrace from there until this fair value gap. That is my expectation, that is my thinking. So this is the way you have to read the price. If you do that type, this way, if you read the price, trust me, brother, trading is too easy. Taking entry, it's the easiest thing, but the hardest thing is to wait. When you will see this run, some of you, not some of you, I will talk about myself. At the beginning of my trade, I was thinking I should go for buy. So I would force the market. I would say this is the first fair value gap, this is the last fair value gap, so I am going to take my entry over there. Market is going to take that buy side liquidity. But slowly, when I have started to read the price, I got the precision when and how you have to take your entry. And when you are going to take your entry, how you will observe every single fair value gap, every single body of the candle. When you will start to understand them, suddenly you will start to see whatever you are ordering market, it is just listening to you. Whatever you are just ordering, it is just listening to you. The price come here, see, from the constant encroachment of the last, from the 15-minute fair value gap, it rejected from there, it came to this fair value gap. Now I will wait for another buy setup. Where is my liquidity? See the liquidity, this is my liquidity. I will wait for the buy setup. Now I don't know you guys are getting bored or not. Now this is the inversion fair value gap. I'm going to remove that one because that is very much confusing. But I talked about this, and then some of you actually messaged me and told me that inversion fair value gap, I am just creating some rules. Okay, the thing is, guys, I am not creating some rules. Yesterday when I have uploaded, just let me show it to you. I'm sorry for that. I need to clear this one. I forget every single time whenever I come live. I forget to talk about. So just give me 1 second. I'm just showing it to you. Okay, here. So that was the entry from uh, ICT. Okay, so you can see NQ live execution 10:50 to 11:10 algorithm macro. So that was his entry. Now I don't want to talk about the macro. If you go to your chart and if you watch the macro entry, whatever I explained about the macro, you will see it worked 1,000 times perfect. Okay, that was the perfect macro entry. Okay, but I'm not going to talk about the macro. I would love to talk about the ICT. This is the inversion fair value gap. See, when price came to this inversion fair value gap, ICT took his first entry. Now this is the breaker block, low, high, lower, low. So this is the breaker block. This blue line is the water block level. See the down close candle opening, that is the water block level. The price come here, it went higher. He has marked this fair value gap as his inversion fair value gap. Okay, now my question is, there was some other fair value gap. Okay, I think here is one fair value gap, here is one fair value gap, there is one fair value gap, here is one fair value gap. He didn't mark anything over there. Why he had marked this fair value gap? Why he had marked it as his inversion fair value gap? Now look, price came here to this 50-minute, this fair value gap, any of this fair value gap. I'm not going details over here. It has traded that fair value gap, then it went higher, just gave him the market structure shift. Okay, price went little bit lower, take one more time liquidity, gave him another market structure shift over there. When it has given him the market structure shift, it went lower. Now think like that way. It has taken liquidity. First it give him the market structure shift to the higher. Now it has taken the liquidity, it went lower. It has given his lower market structure shift. Why he was expecting higher run, that is different matter. I'm just telling you the fact. It has taken the buy side liquidity, gave him the market structure shift. Before here, whatever I talked, just forget it because otherwise you will be confused again. It has taken the buy side liquidity, gave him market structure shift. This is the fair value gap. So what price should do? Price should come here, then expand lower. It should do that, and it should take the obvious low. It should do this. Price failed to do that. Instead of that, price went through that fair value gap. Now this is the inversion fair value gap. Now why this specifically this fair value gap is inversion fair value gap? Because when I got this market structure shift, this swing low failed to take the lowest low or the nearest low. It failed to take that low. That is the reason I'm going to mark this as my inversion fair value gap. That is valid inversion fair value gap. If I saw this low, okay, not this low, okay, later price come here, it went lower, it has taken the liquidity, then this fair value gap would have, I would use this fair value gap in another way. But when price came here, to this level, this swing low, that swing low has made this fair value gap. This low failed to take that low. Do you understand? This low failed to take that low because I don't have any other low over here. After the market structure shift low, there is no other low. If I saw another low over here that is more obvious, I mean something like this, very obvious low. If I saw that, then I wouldn't mark that on as my inversion fair value gap. When it failed to take any type of liquidity, this is the inversion fair value gap. This low, when this low happened, this fair value gap, I don't care about this fair value gap. I don't have any intention about this fair value gap as my inversion fair value gap. But if you'd love to mark it as a setup, then this is your liquidity taken, market structure shift. There is your first fair value gap, there is your breakaway gap. So this is the breakaway gap, that is the last fair value gap. When prices come back again over here, that is the last fair value gap. I will use that as my last fair value gap. But this fair value gap is my inversion fair value gap. Now ICT marked that on. ICT never talked about this thing. Okay, when he marked his I fair value gap, you will see most of the time ICT marked the inversion fair value gap, it worked. Whenever he marked the inversion fair value gap, just look at the swing. Okay, if you mark this one as a bullish inversion fair value gap, then look the swing low. Did it take the low? If you use, if he used the inversion fair value gap as a bearish fair value gap, okay, that means market will come here and it will expand lower. Then you will look the high, swing high. Did it take the highest high over there? You will just observe that. Nobody will tell you this. Nobody ever explained this thing, even not even ICT. Okay, now if you just tell me, brother, you are just creating some rules. Am I creating some rules? I have seen, I asked myself why ICT marked that specific inversion fair value gap as his inversion fair value gap, and I got this thing. Similar most of the time, 80-90% of the time, I got this information that this swing low failed to take that swing low. It that's the same thing I got most of the time. So I just write it down as my rule. Is it my fault? Is it not wrong? Is it wrong? Am I wrong? Am I creating some rules? So I really don't know why some people actually make some kind of uh, message to me that I'm just creating some rules. But trust me, brother, I'm not creating anything. I'm just observing ICT closely. I'm asking myself why is that? Why it is not that? So I'm just asking myself. That is the reason. You will say every single time whenever I talk about something, I gave you some rules, specific rules, and that is I didn't create it. Okay, nobody, even ICT also sometimes he doesn't talk about that. But what he has done, I observed that. I see what is the similar thing. How can I mark a fair value gap that is more important? Look, this fair value gap, when price came here, it went higher, it failed to take that highest high. Instead of that, it has made this equal highs. Okay, this fair value gap, this is my inversion fair value gap, this is my inversion fair value gap. It should go above. Then if it come back again to this fair value gap, that is your i mean perfect place to take buy. Now if it come here, started to go lower, you are willing to take sell, you can. But if you have any sell side liquidity, then as I have buy side liquidity, I will use this inversion fair value gap as a inverse way. Okay, that means when it will come here, it should go lower, but I'm expecting it will go through this inversion fair value gap, come back again to this fair value gap. That will be my entry point. This is my buy side liquidity. I will go for that. So many talks, am I boring? So boring, right? I'm not smiling. Some people, when they trade this, haha, I should smile sometimes. But brother, when I start to talk about something, I forget every single other thing. Okay, I only think how I can make this more clear to you. Now, where prices come to the the last fair value gap. This is the last fair value gap from the 15-minute chart. Okay, forget about this fair value gap. Just forget it. This is the last fair value gap. The breakaway gap. So let me go the 15-minute chart one more time. Nobody can close below this consequent encroachment. That is my thinking. If a body close below the consequent encroachment, I'm not thinking that this is the setup. liquidity taken, market structure shift, came to the first fair value gap, it is going higher. I'm not thinking about this. If it closed below the constant encroachment, I will start to think market is more interested to go low. That is my expectation. That will be my expectation. This is how I read the price. Now, when I should take my entry. Now I am at the 1 minute chart and I am in the breakaway gap. I'm expecting some kind of setup over here. Price will take the liquidity. It will give me very nice market structure shape. I will go for buy. Why? I have very clean buy sell liquid over there. I am expecting that. If it gave me the setup over there, that is the perfect. If it failed to give me the setup, instead of that, it went through this fair value gap. I'm going to remove this one and I will go to 15 minutes at one more time. I will mark the last fair value gap. I will observe the last fair value gap. If it can hold the price or not. If it can hold the price, I will expect the same thing, higher run. If it failed to hold the price, I will take my sell with so much confidence that market is coming here to this 50-minute last fair value gap and it is going to take that liquidity level. Boom. Simple thing, man. You have to read the price. You just can't open your chart and take your entry. It's not possible. We learn every time something new, even if you repeat it so often. There are so many details, so it would often difficult to grab everything at once. Okay, I mean, I'm sorry for that. Whenever I start to talk, I forget about everything. So I start. I just keep talking. I'm sorry. So you should guys stop me sometimes. Brother, stop over there. That's enough for today. Don't tell anything else. Uh, you should stop me. But you see, I just repeat the same thing. I don't make the new things. Like I'm not interested to talk about quarterly theory, maybe PDRA. If you ask me to talk about the PDRA, I can talk about it. I know how to use this. Those, but I don't use those theory when I do my trade. When I'm in my live trade, I'm not doing that type of things. Why? Because I don't get precision from there. Maybe someone. No, I don't understand that. That doesn't mean you won't understand. Maybe if you understand the PDRA, premium discount array, you understand then that better than anyone else. Please go for that because that is the best market maker X model. If you understand that, just go for that. That is the best. Even ICT recommend that. I find it difficult. That is my problem. I find it difficult, so I don't trade them. What I find much more easier. Last fair look at that is much more easier for me. Some people will tell you that please mark the PM session high, previous day high, previous session high, weekly high. If price can take that weekly high, then that is the manipulation. Now it is going toward the go to the weekly chart over here. This is the weekly chart. So price failed to take that high. So it has much more possibility that it will expand lower and it will maybe come here somewhere. Okay. So I don't see that way. I don't see the price. But if you can understand this, please go for that. I'm not restrict. I'm not going to restrict anything to you. I'm just explaining my expectation, the way I read the price, the way it's easier for me. It's easier for me. That doesn't mean it will be easier for you as well. Whatever is easier for you, please go for that. So price came here to this rejection block. I mean the just let me remove it. I don't need that anymore. So this is the rejection block. Price came to the rejection block, but I believe price is going to take that buy side liquidity. Why? Because it went above the constant encroachment, mean threshold of the order block. So that is my thinking. Yeah, market can come back again the constant encroachment of the hourly fair value gap. It can do that. I mean, from the hourly chart, even if you just go to the hourly chart, you will see it can come easily over there. This constant encroachment maybe little bit lower, maybe to this fair value gap. It can come to this fair value gap as well, because you have only this fair value gap from the hourly chart. It can come over here, but I believe market is actually going higher and take that buy side liquidity. It will take that today or tomorrow, I don't know, but I'm thinking the way price is going toward that buy side liquidity. Right now it is just retracing, I believe, because this is the reaction from the rejection block. The price came to the rejection block. This is the reaction. It can come to this fair value gap from 15-minute chart. Let me mark it here. So it can come to this 15-minute fair value gap, then it can start to go higher one more time. If it went through this 15-minute fair value gap, I will do nothing. I will do nothing, because from here I got the confirmation that market is going higher, and until it is taking the buy side liquidity, I'm expecting higher run. But if this 15-minute fair value gap is failed to hold the price, it went lower, there is another word block, consequent encroachment, I will do nothing. Okay, there is a volume balance. I'll just observe the price, because I have nothing to do. Tomorrow is CPI. This is the confluences. Tomorrow is CPI. You have to be careful. So that's all for today, guys. And just before closing, let me go to the Nasdaq one more time. I missed it. I missed him so much. Oh man. Let me actually see how it will react over there. So that was the 15-minute fair value gap. I will go step by step if I see any setup or not. Okay. And if there was any setup or not, I'll just see that after 9:30. So this is the 9:30. This is the 9:30. Price came to this fair value gap, to the last fair value gap. It has taken all of this buy side liquidity. Now it is already taken. I mean, this buy side liquidity is already taken. Don't need this, that one. It has taken the buy side liquidity. After that, is there any market structure shift? I had a market structure shift over here. That is a very clean market structure shift. No fair value gap. No problem. So it has made this. Remy, are you there, brother? You are here. Just tell me if it worked or not, if it has worked or not. Okay, just let me know that. Oh, no, go. Just let me know it worked or not. Okay, if you are here or anybody else who has the, I mean, the real data, just let me know that it worked or not. Anybody who has the real data, I mean the live data. Okay, Remy, can you tell me that this setup worked or not? Okay, it should work. I believe it should work. So it actually reacted from the last fair value gap. Okay, but it has done its job over there, that it was showing me. It will go to this. Yes, it worked. Okay, thank you, brother. So if I would take the entry, that was the entry. I mean the over confirmed entry. That's cool. You have to just think, I mean, think about the order block level. I mean, price can go to until the order block opening. It shouldn't go to the mean threshold, so you have to cover the mean threshold, and the most probably it will go the 50% of this fair value gap. The maximum run is should be the 50% of this fair value gap. That should be the maximum run, but it can easily go to the order block level. It can do that. Otherwise, this is your very clean sell side liquidity, and maybe the extreme one. I don't remember what is this line is. If you have more contract, then you can hold it until there. Okay, that's cool. I think you guys get something from here, and any of you, if you are new, you can subscribe to my channel. Okay, that's all for today. See you guys. Bye bye.